Hey, ladies.
Hey there, how y'all doing?
Good, good. How's everybody? What's going on? We
We
are
are amazing.
right.
Everything is good, yes.
Yeah.
All is well. We're talking about life insurance. It's still September, right?
Yes. Still
Life
September,
insurance
Life
affair.
Insurance Awareness Month.
Yeah.
Absolutely. You know, something came up when we were discussing our topics over the month, and that was, how do I know if I have enough insurance? Monica, you kind of touched on this a little bit during one of our sessions, but we thought we'd bring it up again to make sure, because some people have life insurance at their jobs, but they're not sure if that's enough. Some people are concerned, like, will I be able to take my life insurance with me when I go?
Yeah.
Right? What happens if I get terminated and I don't have insurance anymore? What should I do? So I think we're answering all of those questions today in our session. So
Yeah.
let's go ahead and introduce ourselves before we get started.
Yeah,
I'm
I'm
Brandy
Monica
Gamble.
Love.
Oh, Monica, you go, girlfriend.
I'm Monica.
And I'm Brandy. I help women and men make smarter money choices.
Yeah. And I'm Rosalind Marie, and I really help families just make better money choices so they can have peace of mind from the time that they're born, coming to the earth, into the time that they leave the earth.
Yeah.
Awesome. So let's get started with just helping folks understand how much insurance they need. Like I said, Monica shared with you guys the dime method a few weeks ago, but we're going to go ahead and go through it again today just to
Right.
make sure that we got a good understanding.
So, what is the dime method? Let's break that down because I've heard of it before, right? It sounds familiar. So, let's dig into it.
Absolutely. So the dime method, D stands for debt, making sure that you account for any debt that's outstanding that your family would have to take care of in the event that your demise. Income, meaning you want to make sure that you are leaving the amount of income that will keep your family going in the event that your income is no longer there. Mortgage, M, you want to make sure that your mortgage is covered. If you've got a 200,000, 300,000, 400,000 mortgage left, you want to make sure that that's covered for your family, right? So that they're not worried about paying that mortgage. And then education. If you've got children or children that you're responsible for, you want to account for whatever education cost that you foresee in the future that you're not able to contribute to anymore. So dime is a traditional method used in the industry when you're trying to figure out your insurable need. It's not the only method, but it's a good method. So we're going to walk through this today with you.
Yeah, for sure. I'm sorry, Brandy, can I just add on? Because sometimes we think of education as far as the children are concerned, but older people are going back to school as well. And so you want to consider that as well. You might decide, you know what, I want a new career change. So it might be something that you decide to go back to school and invest in yourself. So I just wanted to.
Or even if it's not going back to school, it might be some loans that you have that are outstanding that you need to care for. Because I've met quite a few people in their 40s and 50s who still have debt from those loans that they took out when they were in their 20s. So that needs to be cared for.
Yeah,
absolutely. And those are primarily private loans that we want to think about. So I'll make a quick note. When you have student loan debt that is federal student loan debt, that debt typically does not fall on your family. But if you've got private student loan debt, absolutely, you got to make sure that that is covered. So thank you all for sharing that. Monica, do you want to walk us through the amounts? I'll go ahead and pop them up on the screen for you.
Okay, well, so say for instance, and this is a hypothetical, if you have debt of maybe $10,000, a credit card debt or whatever that might look like, then you would put the 10,000 there. If your income is right around $100,000, you would multiply that by 10 because you want to make sure that you care for at least the next 10 years that your family has to live without you. So you will multiply that by 10. And whatever that number is for you, if it's 50,000, 20,000, whatever that annual income is, you would multiply it by 10, and then your number would be whatever it is. In this scenario, it's a million. Say you have $300,000 left on your mortgage, then you would pop that in there. And for education, if you have two children, the average education, can you believe this nowadays? The average education is right around $100,000 ish, $120,000 per person per school cycle or school year. I know the other day I was talking to my sister. My kids are way grown and gone, but I was talking to my sister. She has a kid who's in college, and he's in his second year, and the tuition is $40,000 per semester. So that's huge. So whatever those numbers look like in this scenario is 240. So you would add up all of those four lines, and then you would come up with the number. This scenario is $1.5 million. And then your insurance policy that you already have in place is $200,000. So you would reduce that 1.5 by the number that you already have, and the shortfall would be 1.350. So that's how much your insurable need would be.
Absolutely. I want to touch on the income for a moment. Typically, when we're working with clients, we go over the D, the M, the E, and we leave that income last. Because what most people need to think about is after your mortgage is covered, after you've got education covered and your debt is taken care of, your expenses, are fairly low at that point, right? Fairly. You want to make sure that you are leaving still enough income, right? Now, Monica said 10 times the income, which is what's on the slide. But some people say, you know what, my husband or my wife makes more money than I make, so I may not need to leave as much as 10 times. You have the option. You can leave from 1 times your income up to even 30 times your income. You have the option. So that number is very flexible. That is a variable there. So just wanted to mention that. Think about after your bigger expenses are taken care of, how much income are you going to want to leave behind?
And if I could say this, Brandy, because I'm going to tell a little story here, and it's my story. When I was working in corporate America, I had a policy that was 1.7 million. And I thought, oh, this is amazing. That's fine. That's all I need. And so I stuck with that $1.7 million policy that I had while I was at work. Well, when it was time for me to retire, I thought I could take that with me and just continue to pay for it, not thinking or not knowing actually that those policies that we have at work are called group term policies. So when you're no longer employed with that employer, the chances of you taking that policy with you are usually slim to none. So they said, no, this is not a policy you could take with you when you retire. We'll have an insurance agent give you a call from the company that we use. And they did. They gave me a call. And you know what they offered me? $25,000 policy was the max that I could get. Mind you, I had been with the company for 25 years. So I started there when I was 24, 25. Now, 25 years later, I'm 50 years old, 51, I think. And so now I had to be quoted based on my age and my insurability, because I am a survivor of cancer. So with having that diagnosis in my record, even though it was a few years old, they still counted that as to seeing whether or not I could get insured. So your insurability is a real factor.
For sure. Monica, this is a really important point that I don't really believe people think about, right? Because a lot of people have policies with their jobs. And so there are some questions that you want to ask yourself about the policy that you may have with your job. First of all, do you have a policy with your job? Or do you own it outright? Is it your policy? Or do you have both, right? Because some people have both. If you have a policy with your job, you want to ask a couple of questions, and it's right there in the policy. So, or you can actually call the corporate number to find out the details of your policy. One, you want to know how much you have. How much coverage do you have? You also want to find out what kind of policy is it. Is it a term policy, or what we also call a temporary policy? Because most people really outlive it. Or is it a permanent policy, or also called a whole life policy, which usually technically lasts the rest of your life sometimes, right? But you want to ask those questions to find out what kind of policy you have, the amount of coverage that you have, and you also want to find out, can you take it with you? As Monica mentioned, if you leave, if you resign, if you get fired, just talk about that. Can you take it with you? And usually you can, but it's going to be probably a lot less. I want to share with you all a story about my mom, who is retired right now, right? And retired in education, and is over 70, almost 75. And for the most part, when she retired, she was able to take a policy with her that was close to about $300,000, right? And so you're talking about, let me see, my mom has been retired. It hasn't been 10 years that she's been retired. But needless to say, it probably would have been a benefit for her to keep that policy, because guess what? Guess what we're looking for now? She's almost 70. Well, she's 74, but we have to actually include 75 because that's her next birthday and it's close. We're looking at policies that are a lot more costly because she's a lot older, and she does have some health conditions. So
Yeah.
yeah.
It gets pretty sticky, when you get an older in age, right? And it's different for everyone. It's different for everyone. I want to help people to not be as afraid to just search and see what's out there, right? Make sure, there are policies available. Even if you have health conditions, there are some policies available. There are guaranteed life policies available. There are policies that, potentially are lower in cost than you think. Some people are afraid to check because they think it's just so expensive. Don't be afraid to check to see, even if you've allowed a policy to expire, or, you've left a job and wasn't aware that your policy didn't continue. Just go and check. I recommend you talk to a financial professional. Reach out to the exit strategy. We're here to help. And we will definitely help you through that problem or that possibility of getting your insurance back in place. Now, we talked about, of course, how much insurance you should have. We've talked about whether your job insurance is enough, health issues. Thank you, Monica, for bringing that up, right? The fact that later in life, sometimes you have history, right? Health history, even if you are recovered or survived from that, it still stays on your record. But because you have that, pre-existing condition, you may think you can't go and get policy. You definitely can go and get a policy. You just have to be aware of the options. One thing we also shared about, or we talked about insurance as we were thinking about our topic for today, is, term versus permanent, like the type of policy. And Rosalind kind of brought that up. I want to just touch on that permanent a little bit, Rosalind, if we can. You mentioned whole life. Some people think whole life is the only permanent option that's out there. There are actually 5 different types of permanent options that are out there. We don't have to go through them all right now. I think we can talk about them later down the road. But those 5 different options, don't get stuck thinking that whole life is your only option. You've got options that will allow your cash value to grow a lot faster than whole life. You've got options that will give you more flexibility than whole life. Whole life is very restrictive. You've got some options that will actually even allow you to invest. So we want to just keep your mind open that whole life is not your only option. And we're going to be talking about over the next month, over the month of October, how you can use permanent insurance to actually build your wealth. And we'll be talking about all those different options. So stay tuned, as we'll be bringing that information to you. This has been good, ladies.
Yeah, it is good. And I just want to encourage anybody, if you have tried to get insurance before and you feel like it's a lost cause, that's not necessarily true. I'm going to stick a feather into Brandy's cap right now, because when I first came into the business, I used Brandy. Yes, I used her to find me a policy, and it wasn't easy. But she did it. And the nice thing about, and that's one of the reasons that I came into the business too, is because one of the nice things about what we do is that we are not restricted to just one company. We have multiple companies that we work for. We don't work for them, we work for ourselves, but we have access to those companies, and we don't have to have any allegiance to one or the other. We have an allegiance to our clients to make sure we're able to find them as, the best possible policy for their situation.
Yeah.
Absolutely.
Yeah, for sure. Monica, thank you for that. I just want to also let you all know, stay tuned, because for the month of October, we're also going to be talking about the benefits that you can include and bundle into your life insurance policy, right? And so some of those are considered to be LB or living benefits. And so if you do get ill, as Monica mentioned, right, cancer, stroke, some of those illnesses that people go through that really change their life and they can't really take care of themselves,
Yeah.
you can add those kinds of benefits to your policy. And so we're going to be diving into that. So y'all got to come back and stay tuned. But I also want to make sure that you guys continue to follow us. We are on Instagram, we're on Facebook, we are on LinkedIn, and we're also best-selling authors of an
Yes.
Amazon bestseller. And actually, Monica Love has the books on her bookshelf behind her. It's called Design Your Wealth Mindset. And so I just want to let you know that I will be adding that information in the links below so that you can grab your copy. Okay. And we'll also add some additional information so you know where to find us, and information that'll help you become more educated. So when you do sit down with one of the exit strategists, let me just put
Okay.
that out there.
Claim it.
Come on, you show up educated and ready to elevate to the next level.
Yes. And if you have a church, a school, or any organization, a business that you would like to learn more information in the financial education world, then we are available for to come to your location, be it a business.
Yep.
We will come and educate your people.
Yes.
Awesome. Education is power, but it's only powerful when you implement it. So
That's
hopefully you take
right.
the information we've shared with you today and you do something with it. Reach out to the exit strategy so we can help you implement.
Yep.
Exactly. And then what they say, stay ready. So you don't have to get ready.
All
Some
right,
of
let's
us,
do
we
it.
are at a place where Brandy and I are in Georgia, where this
Yeah.
hurricane is coming through, right? It's coming through and it's whipping up all other places. But the people that were ready or that evacuated did not have to get ready and didn't have to wait
Right.
till the last minute. So that's what we want to help you do, making sure that you're ready with the right life insurance and financial education. And on
Yeah.
that note, ladies, you have anything else?
No.
Have a great day.
Have a good one.
Right. Take
Bye.
care.